electrification will go faster because even the most traditional truck customers are buying hybrid. They're interested in electrification.
Ford has just made a game-changing declaration that is shaking the entire automotive industry. And to be honest, the reason behind this announcement is shocking. This is not something anyone saw coming. It is bold, it is daring, and it is already sparking heated debates across the globe. We all know how big of a company Ford is and how much influence it has over the industry. But these days, the market is shifting too fast, and the automotive industry is at a crossroads, and Ford has just made a decision that might redefine its legacy entirely. With the competition closing in and pressures mounting, the stakes have never been higher. So what exactly is Ford planning, and why is it sending shockwaves through the industry? But most importantly, how will this affect you? Whether you are a loyal customer, a skeptical critic, or a curious observer, this is the story you need to hear. Let's dive in. How did we get here? For over 100 years, the name Ford has been synonymous with innovation, resilience, and American ingenuity. It is impossible to discuss the evolution of modern transportation without placing Ford at the heart of the narrative. Throughout the decades, Ford has become more than just a car company. It is a cultural icon, a badge of progress. From the sleek lines of the Ford Mustang to the rugged dependability of the Ford F-Series, this brand shaped not just how we moved, but how we dreamed. Yet beneath this gleaming legacy, subtle cracks began to form. The automotive world was changing, and whispers of a coming storm started to circulate. At first, these murmurs were easy to dismiss. After all, Ford was a titan in the industry, but as competitors began experimenting with technologies like electric propulsion and autonomous driving, a quiet revolution was brewing. Ford, like many legacy automakers, had become comfortable, attached to traditions that had once made it great. The question was no longer whether Ford could rest on its laurels, but how long it could afford to. From dominance to doubts. Fast forward to the 21st century, and the global automotive market had become a battlefield. Electric vehicle-only brands were no longer niche players, but serious competitors, backed by cutting-edge technology and fervent consumer support. Tesla, with its sleek designs and audacious vision, surged ahead, leaving traditional automakers scrambling. Meanwhile, economic uncertainty and shifting market dynamics created additional pressures. Ford found itself facing an uphill battle. Sales figures painted a stark picture. While Ford still boasted strong numbers in its truck and SUV segments, these were not the guaranteed successes they once were. Legacy models like the Ford F-Series, while still popular, began to stagnate. Once prized SUVs like the Ford Explorer and the Ford Escape were no longer the hot commodities they had been in decades past. The sales of the Explorer, for example, dropped significantly from over 200,000 units in previous years to just around 100,000 in recent reports. Across dealership lots, these models started to pile up, gathering dust where they once flew off the showroom floors. The competition wasn't just coming from electric-first brands. Automakers like Toyota and Hyundai, long considered reliable but unremarkable, had evolved into innovators. They invested heavily in hybrids and electric vehicles while maintaining the affordability and dependability that buyers loved. In the year 2023 alone, global electric vehicle sales reached nearly 3.2 million units, representing a growth of over 20% compared to the previous year. In contrast, Ford's hesitation to fully commit to electric vehicles became an Achilles heel. The company seemed caught in a balancing act, trying to please traditionalists while not alienating those looking for the next big thing. Unfortunately, hesitation does not win races. Forces beyond Ford's control. The challenges facing Ford were not purely internal. A trio of external forces converged, cornering the company into a moment of reckoning. The first was rapid technological change. Electric vehicle technology advanced faster than many in the industry had anticipated. Battery capacities improved, charging networks expanded, and software innovations brought smarter, more connected vehicles to life. Brands that had built their operations around legacy internal combustion engines suddenly found themselves woefully behind. The second force was a seismic shift in consumer preferences. Buyers, especially younger generations, were not just looking for cars, they wanted statements of their values. Sustainability became a driving factor, and vehicles powered by renewable energy sources symbolized a commitment to the environment. For Ford, a company with deep roots in gas-powered vehicles, this shift presented a daunting challenge. Finally, global regulatory pressures accelerated the pace of change. Countries across Europe and Asia introduced aggressive emission reduction targets, setting deadlines for the phase-out of fossil fuel-powered cars. The United States, while slower to adopt sweeping measures, also signaled a move towards stricter environmental policies. Automakers had no choice but to adapt or risk obsolescence. Ford, for all its history and influence, could not escape these forces. The company's reliance on traditional models and manufacturing methods now felt like an anchor, dragging it toward the bottom as the industry surged ahead. The road that once seemed endless now had a sharp, unavoidable bend. The tension beneath the surface. Inside Ford's walls, the tension was palpable. Engineers and designers, eager to push the company into the future, found themselves at odds with executives wary of alienating loyal customers. The debate was not just about vehicles, it was about identity. Could Ford maintain its status as a symbol of American strength while embracing the very technologies that seemed to challenge its legacy? Dealerships too were on edge. For years, they had thrived on a steady stream of bestsellers, but as inventory began to stagnate and demand shifted toward competitors, whispers of unease spread through their ranks. Suppliers reliant on contracts with Ford began to question whether the company's hesitation would jeopardize their own futures. Rumors started to swirl. Would Ford double down on its traditional strengths, banking on the enduring appeal of its trucks and SUVs? Or would it take a bold leap, committing fully to the electric revolution that many believed was inevitable? These questions loomed large, creating an atmosphere of uncertainty that rippled through the entire automotive ecosystem. Then, as if on cue, the whispers gave way to a rumble. Ford was about to make an announcement, one that would send shockwaves not just through its own ranks, but across the entire industry. What that announcement entailed remained a closely guarded secret, but one thing was clear: whatever Ford was planning, it was going to change the game. With the stage now set, the world waited with bated breath. The next chapter in Ford's storied history was about to unfold, and it promised to be nothing short of revolutionary. But as the saying goes, revolutions are never without their casualties. What would Ford gain, and what would it risk losing in the process? Only time, and this unprecedented announcement would tell. The big reveal. After years of speculation and mounting pressure, the company unveiled a bold and unprecedented move, a commitment to completely phase out all production of internal combustion engine vehicles by the year 2035. That is correct, Ford is going all electric and is accelerating this transition far ahead of previous predictions. In tandem, the company announced the discontinuation of several beloved but aging legacy models, including the Ford Mustang's gas-powered variant, signaling the end of an era. This is not just a tweak in strategy, it is a seismic shift. Imagine a massive ship navigating rough waters suddenly deciding to change course. The magnitude of this decision is similar, shaking the core identity of a company that has been synonymous with roaring engines and classic American cars for over 120 years. Ford's leadership framed this as a necessary pivot, with their chief executive officer stating, "The future is electric and we are taking the lead." The announcement also included a staggering commitment to invest $50 billion in electric vehicle development and battery technology over the next decade. Ford plans to release 10 new fully electric models globally by the year 2027, ranging from compact urban cars to heavy-duty trucks. This is a move Ford executives believe will not only future-proof their business, but position them as a leader in an increasingly crowded electric vehicle market. But the big reveal does not stop there. Ford also introduced a groundbreaking pricing structure designed to attract budget-conscious buyers, signaling an understanding that affordability is key to widespread adoption. By offering entry-level electric vehicles starting below $30,000, Ford aims to undercut rivals like Tesla and Rivian in the race to dominate the mainstream market. The announcement felt like a declaration of war on competitors and a bold statement that Ford is ready to embrace the future. However, as with any major decision, the ripple effects are both vast and complex. Industry shockwaves. The immediate reaction from the automotive world was electric, pun intended. News outlets, social media platforms, and industry insiders exploded with commentary as soon as Ford's announcement dropped. Analysts were quick to point out the audacity of the move, with some hailing it as a masterstroke of innovation and others questioning the risks of such an aggressive timeline. Competitors were equally stunned. Rivals like General Motors and Stellantis responded with cautious statements about their own plans for electrification, but the undertone was clear. Ford's decision forced everyone to reevaluate their strategies. Tesla, the undisputed leader in the electric vehicle space, appeared unfazed, with its chief executive officer famously tweeting, "Welcome to the party, Ford. Let's see if you can keep up." Meanwhile, legacy automakers like Toyota and Volkswagen scrambled to assess the implications. For years, these companies had been walking a tightrope, balancing investments in electric vehicles with a strong reliance on internal combustion engine sales. Ford's announcement, however, may push the entire industry closer to a tipping point. Social media was ablaze with divided opinions. On one side were die-hard Ford enthusiasts lamenting the loss of iconic gas-powered models like the Ford Mustang. On the other side were younger, eco-conscious consumers celebrating what they saw as a necessary step toward combating climate change. Hashtags like Ford Goes Electric and End of an Era trended worldwide, sparking heated debates about tradition versus innovation. Investor calls were another battleground. Financial analysts grilled Ford's leadership on the feasibility of their ambitious timeline and the costs associated with such a massive transformation. While some expressed cautious optimism, others flagged concerns about potential short-term losses and the risks of alienating traditional Ford customers. Media outlets were equally polarized. Business channels highlighted the $50 billion investment as a sign of Ford's commitment to innovation, while critics questioned whether the automaker could execute such a monumental shift without stumbling. Even late-night comedians chimed in, joking that the sound of a silent Ford Mustang might be the most shocking part of the announcement. The buzz around Ford's decision was palpable, and while the reactions were mixed, one thing was certain: no one could ignore what had just happened. Financial and economic ramifications. Ford's announcement did not just spark conversation, it sent shockwaves through financial markets and supply chains. Within hours, Ford's stock saw a dramatic 10% surge, fueled by investor excitement over the company's bold vision. However, by the end of the week, the stock price settled back down as concerns about execution risks and short-term profitability tempered initial enthusiasm. Dealerships were among the first to feel the impact. Ford's plan to shift entirely to electric vehicles left many dealers grappling with the reality of overstocked internal combustion engine models. Some dealers voiced frustration, questioning how they would sell vehicles that consumers might now perceive as obsolete. Others saw the announcement as an opportunity, hoping to leverage Ford's electrification strategy to attract a new wave of tech-savvy buyers. The $50 billion investment in electric vehicle research and development will also have far-reaching implications for Ford's global operations. The company announced plans to retrofit several manufacturing plants for electric vehicle production, which will create an estimated 20,000 new jobs in battery technology and software development. However, this transformation comes at a cost. Ford confirmed it would phase out older production lines, resulting in significant layoffs at facilities tied to internal combustion engine models. The supply chain ripple effects are equally significant. Ford's commitment to electric vehicles has spurred new partnerships with lithium mining companies and battery manufacturers, as the company aims to secure a steady supply of critical raw materials. This shift is expected to inject billions into the emerging battery supply chain, but it also raises questions about ethical sourcing and environmental sustainability. For consumers, the new pricing strategy is a potential game changer. By targeting a starting price of under $30,000 for entry-level electric vehicles, Ford has positioned itself to challenge competitors like Tesla, whose models typically start well above that range. This move could disrupt the market, making electric vehicles more accessible to middle-income families while pressuring rivals to lower their prices. However, the economic gamble is clear. Ford's leadership acknowledged that the company expects to incur losses in the early years of this transition. The chief financial officer explained, "This is not just about the next quarter, it's about the next decade." In other words, Ford is betting big on the idea that short-term pain will lead to long-term gain, a strategy that could either cement their legacy or cripple the company if the execution falters. So what does this announcement really mean? This is not the first time Ford has faced a pivotal moment that could redefine its future. More than 100 years ago, the introduction of the moving assembly line revolutionized manufacturing, making automobiles accessible to millions and solidifying Ford as a pioneer in the industry. Decades later, the launch of the Ford Mustang in 1964 redefined American muscle cars, creating an enduring cultural icon. However, the current announcement feels different. It is not just a bold step forward, it is a reinvention of the company's identity. While the assembly line and the Mustang were about expanding possibilities, this shift is about survival in a rapidly changing world. The stakes are higher and the margin for error is razor thin. Critics are quick to point out the risks. Some argue that Ford's timeline is too ambitious, leaving little room for unforeseen challenges like supply chain disruptions or slower than expected adoption rates among consumers. Others warn that by phasing out internal combustion engines entirely, Ford risks alienating a loyal customer base that values tradition and performance over environmental considerations. Supporters, however, see parallels to past successes. Just as the assembly line once made Ford an industry leader, this pivot to electric vehicles could position the company as a trailblazer in sustainable transportation. Ford's ability to adapt and innovate has always been a key part of its DNA, and this moment could prove to be no different. The dust is far from settled. Ford's latest move has set the stage for what could be a defining decade, not just for the company, but for the automotive industry as a whole. And as history has shown, when Ford moves, the world takes notice. Regulatory pressures and global mandates. In the 21st century, the automotive industry has faced mounting pressure to shift toward cleaner energy. Governments across the globe have implemented increasingly stringent emissions regulations, signaling that the age of the internal combustion engine is nearing its end. The push for electrification has not been a gentle nudge, but a firm shove, with deadlines that leave little room for hesitation. Consider the European Union's commitment to achieving net zero emissions by 2050. This target is not merely aspirational, it has teeth in the form of penalties for automakers failing to meet mandatory emissions reductions. Similarly, in the United States, states like California have enacted aggressive zero-emission vehicle mandates, with plans to phase out the sale of new gasoline-powered vehicles by 2035. China, the world's largest automotive market, has set equally ambitious targets, demanding that new energy vehicles account for 40% of sales by 2030. For Ford, these mandates created a ticking clock. While the company had dabbled in electrification with models like the Mustang Mach-E, it became evident that incremental efforts would no longer suffice. The penalties for non-compliance, both financial and reputational, loomed large. Ford found itself cornered, realizing that failing to embrace electrification could render it obsolete in the eyes of regulators, investors, and consumers. But the challenge was not simply about meeting regulations, it was about doing so at a pace and scale that would allow Ford to remain competitive. While the company had a century of automotive legacy, the road ahead demanded an entirely different kind of agility, one that Ford could no longer afford to delay: technological leapfrogging. The automotive world is no longer just about horsepower and torque. In an era defined by software and connectivity, technology has become the driving force behind innovation. And here, startups and tech-savvy rivals have gained a critical edge, leaving legacy automakers like Ford scrambling to catch up. Battery technology has been a game changer. The cost of lithium-ion batteries, the heart of electric vehicles, has plummeted over the last 2 decades, making electrification more economically viable. Companies like Tesla have not only embraced this trend, but have also pioneered innovations in energy density, charging speed, and production efficiency. Meanwhile, traditional automakers have struggled to match the rapid pace of development. Infrastructure has also played a pivotal role. Charging networks, once a major bottleneck for electric vehicle adoption, have expanded significantly. Brands like Rivian and Tesla have invested heavily in proprietary charging stations, creating ecosystems that offer convenience and reliability. Over-the-air software updates, a concept introduced by tech-forward companies, have further redefined what consumers expect from their vehicles. Cars are no longer static machines. They are evolving platforms, improving functionality with every update. Ford, with its rich history, found itself tethered to traditional manufacturing practices and product cycles. While its trucks and SUVs dominated the market for decades, the game had shifted. Consumers now expect seamless integration of technology, from advanced driver assistance systems to intuitive infotainment platforms. In a digitally driven market, Ford's approach, rooted in mechanical excellence, was no longer enough to keep pace with its competitors. The realization hit hard. Standing still was not an option. If Ford hoped to compete in a landscape increasingly dominated by software-defined vehicles, it had to leapfrog its traditional mindset and fully embrace the technological revolution. Shifting consumer mindsets. The modern consumer is not the same as the buyer of yesteryear. Today's drivers are younger, more environmentally conscious, and deeply embedded in a digital-first lifestyle. For Ford, the challenge was clear: appealing to this new generation while retaining the loyalty of its older base. Sustainability has become a non-negotiable value for many buyers. A growing awareness of climate change has shifted priorities, with customers seeking vehicles that align with their personal ethics. Electric vehicles, once seen as niche products, are now perceived perceived as a statement of responsibility. Younger buyers in particular view their purchasing decisions as reflections of their values, expecting brands to demonstrate genuine commitment to environmental stewardship. Connectivity is another crucial factor. Modern consumers demand vehicles that integrate seamlessly into their digital lives. From smartphone connectivity to advanced voice controls and smart home integration, the car has become an extension of personal technology. Ford's traditional models, though robust, increasingly felt out of step with these evolving expectations. Ford recognized that clinging to nostalgia was no longer a viable strategy. While heritage models like the F-Series trucks and the Mustang carried significant brand equity, they could not compete with the innovation offered by rivals. Younger generations value authenticity and forward-thinking design over tradition for tradition's sake. The shift in consumer preferences created a perfect storm. Ford could either adapt or risk alienating a demographic critical to its future growth. The company's leadership understood that meeting these new demands was not just about staying relevant, it was about survival in a market that was changing at an unprecedented pace. Internal corporate realities. Behind the scenes, Ford faced its own set of internal challenges. The tension within the company was palpable, as different factions debated the best path forward. Engineers and designers pushed for bold innovation, eager to modernize Ford's lineup and embrace the electric revolution. On the other side, executives weighed the risks of straying too far from the company's profitable gasoline-powered legacy. One major obstacle was Ford's supply chain. Over the years, the company had built a sprawling network optimized for traditional vehicles. Factories were equipped for internal combustion engines, and suppliers were deeply entrenched in producing components for conventional powertrains. Transitioning this massive infrastructure to support electric vehicle production required substantial investment and time, resources that Ford did not have in abundance. Component shortages added another layer of complexity. The global semiconductor shortage, which began in the early 2020s, exposed vulnerabilities in Ford's supply chain. Electric vehicles, with their reliance on advanced chips for everything from battery management to driver assistance features, only magnified the problem. Internally, Ford's leadership wrestled with the timing of their pivot. The automotive industry is unforgiving, and any misstep could spell disaster. But delaying action came with its own set of risks. The market was moving rapidly, and waiting too long could mean losing ground to rivals permanently. Ultimately, Ford's leadership made a critical calculation. The cost of inaction outweighed the risks of transformation. The company understood that embracing the future would require difficult decisions, from restructuring its operations to investing heavily in electric vehicle technology. It was a gamble, but one that Ford could no longer afford to avoid. With these internal realities in mind, Ford's announcement marked a turning point, a recognition that the world had changed, and that the company had to change with it. But as the dust began to settle, one question remained. Would this bold move be enough to secure Ford's place in the automotive future? So what now? Ford's latest announcement is not just a shift for the company, it is a move that is sending ripples through the entire automotive industry. Competitors are now under immense pressure to recalibrate their strategies. Companies that once set their sights on slow, steady transitions to electric vehicles must now consider accelerating their timelines. Rivals like Tesla and emerging startups may benefit from the publicity around this move, but legacy automakers such as General Motors and Toyota face a stark choice: adapt or risk falling behind. This shift will not just impact the big players. Smaller suppliers who are crucial to the supply chains of traditional automakers may find themselves at a crossroads. Those that can pivot towards supplying electric vehicle components or integrating advanced technologies will likely thrive. Others, unable to make the leap, might struggle to survive in this rapidly evolving market. Dealerships too are in the crossfire. Many have built their business models around selling high-margin internal combustion vehicles and offering traditional maintenance services. With the pivot to electric vehicles, they will need to reinvent themselves, focusing on software updates, battery replacements, and a customer experience tailored to a tech-savvy audience. These changes could redefine the car buying process entirely, turning dealerships into hubs for education, connectivity, and lifestyle branding. Investor versus consumer perspectives. Investors are watching Ford's bold move with a mix of excitement and apprehension. Those focused on long-term growth may view this decision as a necessary and courageous step to secure Ford's future in a competitive market. On the other hand, short-term focused stakeholders may worry about the risks, the heavy costs of transformation, the uncertainty of consumer adoption, and the possibility of initial losses. These concerns have already caused volatility in Ford's stock, raising questions about how the market will respond in the coming years. For consumers consumers, this marks a turning point in how they approach car ownership, with Ford likely introducing more electric models and potentially discontinuing long-loved internal combustion options. Buyers may have to adjust their expectations, pricing structures could shift, and incentives to adopt greener vehicles may increase. But for many, the biggest question will be about trust. Can Ford truly deliver the quality and innovation consumers demand in this new era? What's your thoughts on this? Let's know in the comments below.